972-988-1040. Rob Stern, Fridays at 1 p.m. on 1040 AM KGGR.
1040 AM and 106.9 FM, KGGR. Well, good afternoon to you. It is Friday, January 20th, 2023, 23 days into the new year, and another episode of Mortgage Solutions Financial with your host, Rob Stern. I'm Tanya Hall, and I'm just here to just give you telephone numbers like 972-988-1040. If you are out there looking to get into the home buying business, looking to refinance, get a new, mortgage loan from a great mortgage loan professional, get some expertise, advice on all things home ownership, mortgage loans, everything, and especially VA loans. If you are in the VA loan business, you're a veteran, an ex-veteran, or your husband or wife was one, boy, we have an expert here. Rob Stern is in the house. Good afternoon, Rob Stern.
Hello, Tanya. How are you today?
I'm very well. Happy Friday.
Yeah, happy Friday to you. And I can't believe it's already the 20th day of 2023. That is crazy.
Isn't it? I was thinking that this morning. I went, today's the 20th? Where did 20? You see, time waits for no man. It moves, doesn't it?
It's crazy. It's really wild because when I was young, and I can say that now, when I was young, it seemed like time stood still. And, and every day was so long and there was so much to do. And as I've gotten older and now I've got children and grandchildren for that matter, boy, they just seem to fly by just in the blink of an eye.
Right. That's why my mom and dad used to always tell us 8 kids, 6 girls and 2 boys, listen, your time is your most precious commodity. Don't waste it. Use it wisely because you cannot rewind the clock. So your time, use it wisely and don't just give it to anyone or anything. Use your time wisely.
Wow. Very smart people. Very intelligent. That was very smart.
They were. Yeah.
Yeah.
Anyways, let's get to the business of home ownership. And I want everybody to know who you are that may have tuned in and don't know who you are. Introduce yourself, Rob.
Sure. And thank you, Tanya. My name is Rob Stern. Last name spelled S-T-E-R-N. My team is the Lenders Residential Mortgage Team, and I've had the privilege of working with KGGR and the predecessor station, KHVN, now for almost 23 years. We've been broadcasting. I am a direct mortgage banker and lender. What that basically means is that I do not broker my loans out. I don't go out and shop somebody's credit or hit their credit report over and over again trying to find them the right deal or a good deal or a way to get their loan closed. We are the lender. We are the banker. We make our own guidelines. We underwrite our own files. We work directly with the Veterans Administration as well as with FHA and USDA and Fannie Mae and Freddie Mac. We work with minimal overlays, which is very important because typically what you're finding is these third-party companies work with all kinds of overlays, like you need bank statements or you need a certain credit score. And that actually brings me to probably some of the highlights as far as Lenders Residential Mortgage Team and Mortgage Solutions. That is the fact that we will do a VA loan with no minimum credit score. That's very important. It's not that we're special, it's that we just follow the rules. The interesting thing is the Veterans Administration has no minimum credit score criteria on their loans. They will guarantee a loan regardless of credit score as long as it meets some very specific thresholds. And with that being said, it's a very easy loan to qualify for. I do a tremendous amount of veterans loans, VA loans, just because of the fact that most lenders out there are quoting very high credit score requirements, and they seem to be in the process of telling veterans, no, you can't have a loan, when the reality is the VA wants every veteran to be a home loaner. Same thing with FHA. FHA will guarantee a mortgage loan, Tanya, all the way down to a 500 credit score. Therefore, I will close a loan all the way down to a 500 credit score. quite literally put my business, Rob Stern, Lenders Residential Mortgage Team, our business is to say yes, not to say no. Our business is to tell someone, if you can't purchase a house today, you will be able to purchase a house, and here's how we're going to get there. We'll develop an action plan to move forward, and that's what makes this so exciting.
Yes, absolutely. Well, the first of the year, a lot of things happen with this new month, a new year, new opportunities, new checks, like from the IRS, if you file your tax. So a lot of great things happen in the new years. Let's talk about the advantage that folks have in January if they're looking for a home. A lot of people have been waiting to get to January because they're expecting a large check from the IRS, of which they're going to use to put down on their homes. Let's talk a little bit about the advantages of.
Yeah, no, thank you for bringing that up. So, we are seeing bigger and bigger IRS refund checks. The first thing that I want to caution everybody is if you do get an IRS refund, you want to make sure you document that refund. In other words, if you get a check, photocopy the check. If you're going to deposit the check, which you should do, make sure that there's a trail when you deposit it. Do not go to a check cashing place and just cash your IRS check.
That's a good tip.
That makes it extremely difficult to trail. A mortgage loan is pretty much comprised of a paper trail, and if we can't trail the money, then that causes a big difficulty. And so yes, if you're going to get that IRS refund, and when you get that IRS refund, just make sure that you are documenting things and caring for things properly. Now, interestingly enough, you can take that IRS refund check, you can couple that together with a down payment closing cost assistance program, and in many cases purchase a home for little or no money, depending on your situation. So it really makes a lot of sense. There's really a big reason to hang on to that check when you get it. Now, in addition to that, as a homeowner, and we should also talk about this. I know you're a new homeowner, so you understand this.
Yes.
As a homeowner, you're also entitled to a specific amount of tax deductions that you're not entitled to when you are in an apartment or a rent house when you lease anything.
Yeah.
As a homeowner, you can write off all of the property taxes that you pay every year, up to $10,000 a year. As a homeowner, you can write off your mortgage interest as long as the house that you're financing is less than $750,000. What that does is it gives you a tremendous amount of capacity when you are filing your taxes as a homeowner. At the end of the year, you're going to get back a big chunk of money. And so, we've all had friends say things like, man, if you don't own a home, you're not getting back all the money you could on those taxes at the end of the year. And that's an absolutely true statement. That is one of the most accurate statements that I've ever heard. Yeah. If you're not a homeowner, you're not taking advantage of all the benefits that the federal government, the IRS, is giving to us. And I might add that is one of the few benefits that are left.
Yeah. And I am so glad to be partaking of them for the first time this year. I am just, the advantages of home ownership far outweighs those of any, renting or leasing. And I say to those that were like me, don't despair. Prepare, like Rob has told us throughout many of the shows that he's done. He's given us tools on how to become a homeowner, to start preparing. Like you said, you don't turn anyone away. You counsel them. If they're not ready to get a house at that moment, then you counsel them. Talk a little bit about the pre-counseling that you give those potential
yes, ma'am.
Home buyers.
Sure. And I think, as I train my loan officers, fellow managers, this is probably one of the biggest topics, and that is the initial interview. And that is quite literally what we're doing. We are interviewing every client that we speak with. When somebody calls me, whether it's for a VA loan or an FHA loan, or they're just calling to ask me questions about what's going on in their financial life. Perhaps they inherited a home, what have you. It's all about the interview. If you don't ask the right questions, then you'll never get the right answers. And if you don't have the right answers, putting that puzzle together can be very, very difficult. A mortgage loan literally is nothing more than just a puzzle. We've talked about putting puzzles together when we were children, jigsaw puzzles, and you had all the pieces and you'd mix them all up and try and put them all together. Well, that's what a loan is. We're just putting all the pieces in place, but it can be very complex depending on someone's situation. So quite literally, what we want to do is go through the interview process with everybody that we speak with, identify exactly what their needs are and what their desires are, what they're hoping to achieve. Clearly, if somebody makes $25,000 a year, but they want to buy a $400,000 house, we have a lot to talk about, and there's a problem there. Number one, it's not right for anybody to even aspire to spend more money than they can afford. But in addition to that, we want to properly set expectations. We want to make sure that an individual knows what they can comfortably afford, where the expenses fall, and what they could certainly benefit from home ownership. I spoke to a young lady the other day, and she told me that she wanted to buy a $350,000 house, and we talked through this for a while, and she could afford the house, no problem. But when it came down to it, she said, but I don't want my payment to be over $1,200 because that's what I pay in rent right now. Well, clearly that wasn't going to happen. So we had to sort of adjust expectations and have that conversation. That doesn't mean that we're not going to do the loan, because we're doing the loan. But the point is, I think that the biggest part of home ownership is having the right expectation of the process that you're going through. It shouldn't be painful. It shouldn't be hard and difficult, but you got to start somewhere. And the place to start is with that interview. And certainly I'd like to invite everybody to give me a call. My telephone number is 972-739-2350. That's 972-739-2350. You can also find me on the internet. Just go to Lenders Texas. That is LendersTexas.com.
All right, let's get into more about that first-time home ownership, and maybe the pre-interview or the pre-consultation that you give someone that may not know the ins and outs or financially what they need to do to get started on the road to home ownership. Let's talk about, I heard you talk about the young lady that wanted that $350,000 home, but only wanted to pay $1,200 a month. So let's ask this question. Then it leads me to ask this question. What should anyone that's listening need to know about how much of their check or income needs to be realistically thought out to go toward your payment on your home, so that they can understand how much they should realistically know that they're going to have to allocate for home ownership to decide whether they can afford the house they're wanting?
Sure, and that's a good question. There is a mathematical equation that every lender uses, and that's called the debt-to-income ratio, meaning we're going to look at your credit report. We're going to identify how much documentable debt there is on the report. And that's an important word, documentable, because there's things that I don't know about, and if you don't share them with me, I will never know about. In other words, as an example, childcare. If you pay $200 a week for childcare, which is entirely reasonable, perhaps, I don't understand that, and so I can't guide or recommend based on taking that into consideration. If you give your mother $500 a month to help her with her bills, and I don't know about that. First off, God bless anybody who chooses to do that. I think that's great. Absolutely. But that can impact your ability as a homeowner. So is there an equation to use? I would say that quite literally your mortgage, including taxes and insurance, should never equal more than 1/3 of your gross income. So in other words, 1/3. If you're making $6,000 a month, then your mortgage shouldn't be more than $2,000 a month. Now, there's clearly exceptions to that rule, because there are people out there, hard to believe, there's people out there who don't carry a lot of debt. And if you don't carry a lot of debt, then you can push that formula higher. But still, we see most oftentimes that people carry a significant amount of accompanying debt along with their proposed house payment. So your debt to income ratio quite literally takes in two very specific factors: how much your proposed house payment will be, including principal, interest, taxes, and insurance, or PITI, which is commonly referred to. That is your front end ratio. Your back end ratio would be comprised of your PITI, or your principal, interest, taxes, and insurance, plus your outstanding debt. And that's the debt that I'm going to take off your credit report. So quite literally, if someone doesn't have a lot of debt on their credit report, they can spend more on the house. And if they do have a lot of debt, then they should be very careful about how much they spend on the house. Now, quite literally, and I really think this is an important point to make, Tanya. I counsel everybody that your home is the best savings account you'll ever have, the best bank account you'll ever have.
Yeah.
So if you're going to stretch to do anything, rather than putting that $300 a month in your bank account, or putting $300 a month in your 401k, the right thing to do is to put that money into your house payment. In other words, buy a larger house that is worth more money, and maybe stretch a little bit if you have the financial capacity, because in the long run, it will pay huge dividends to you.
Yes, absolutely. Let's talk more about what a first-time home buyer needs to know about what that credit needs to look like. You talked more importantly about the debt to ratio being one of the most important, if not the most important thing, when they're determining how much loan you can afford, because a lender needs to know you're not going to fall into a pigeonhole, trying to pay a loan and you only make $35,000 but you want a $500,000 home. So let's talk about what they look at that people can start to getting together right now. It's the first of the year. We're still making resolutions. Here's a resolution. Sure. Get your credit straight, get your debt to ratio percentage down, so that you will look good to a lender for what that dream home is that you want. So let's talk about paying bills on time. I think you mentioned that's one of the most important things that they look at.
No, you're absolutely correct. And that is clearly very impactful when it comes to a mortgage loan or any type of loan whatsoever. As a lender, one of the biggest things that I'm going to look at is how you've handled your current obligations. And quite literally, the conversation is something along this line. If you can't pay a $50 a month credit card bill, why would I loan you $300,000?
Pretty much.
I mean, that's just sort of the simplified version.
Yeah.
So clearly, whatever your bills are, just keep them current. If you have student loans, don't let those student loans go into default. Right now, everybody's student loan is in forbearance. So this is a great time to be preparing for the future, for what's going to come. Mm-hmm. There's a couple of hard stops when it comes to a mortgage loan. Student loans is one of them. When you have a student loan, that student loan has gone into default, that default needs to be addressed. And when I say it needs to be addressed, we need to know that student loan is in a repayment plan of some form or fashion for a period of time, so that we can show again a reinstatement that is consistent with being credit worthy. And so a lot of people feel and mistakenly that the more credit cards you have, the better your credit is going to be. That's not true. A lot of people feel that the higher the credit limit on the credit card is, the better your credit's going to be. That's not true either. What is true is the lower your ratios are on that credit card, the better your credit scores will be. And it doesn't matter if it's a $500 credit card. The lower the ratio is, the higher the credit score. It's very simple and very, very specific. As a potential homeowner, you want to make sure that you understand your income and how you're being paid. You would be amazed at how many people don't know how much they earn. when I ask them how much you earn and how much do you earn an hour, they tell me about $22, or I think it's $24 an hour, or last year I made $60,000, but there's no breakdown behind where it came from. As a lender, we're going to get to the bottom of that question, no matter how you stack it.
Yeah.
Just know, you have to know where you stand financially. To become a homeowner, it takes preparation. If you're scrambling every month to put the money together to pay your apartment lease, it's probably not time to become a homeowner. Once you're in a position of strength, once you're in a position where you can count on that income every month, where you know exactly what you can and can't afford, then it's time to move forward and become a homeowner. Now, with that said, it doesn't mean that you shouldn't make steps that are positive towards potential home ownership.
Yeah.
Preparation is everything. That's the whole reason why we don't go straight to 12th grade in school. We have to get right. We have to get there. We have to prepare. Go through kindergarten, first, second, third, so on and so forth. You need to be prepared to become a homeowner. There are some great home ownership classes that are online that I can recommend. Anybody wants to give me a call, I can certainly get them in touch with these classes to take that will help somebody kind of get their arms around a little bit of the language and the knowledge of home ownership. But you got to start somewhere, and that's the best place is by giving me a call. My telephone number again is 972-739-2350. That's 972-739-2350. And you can also find me on the internet. Just go to Lenders Texas. That is LendersTexas.com.
Rob, what's the usual percentage down expected for a new homeowner? Because people always think, I don't have $30,000 to put down on a house. I don't have $40,000 to put down on a house. Is there a standard percentage that first-time buyers are required to put down on a home, or is it per income and per the house you're choosing?
It's going to be driven. It's going to be driven by credit to an extent. It's also going to be driven by income to an extent. But the bigger picture here is, if you're a veteran, there is no down payment. Period. Yep. No down payment. So, and it's the same thing with your USDA loans. USDA loans have no down payment whatsoever. They're a tad bit more demanding when it comes to debt ratios, but USDA loans have zero down payment as well. Other than that, Fannie Mae and Freddie Mac have introduced 3% down payment programs. These 3% down payment programs can be coupled with closing cost assistance in many cases, and FHA is typically a 3.5% down payment program. So again, people call me on the phone and I tell them, well, it's going to require a 3.5% down payment, and their first question every time is, how much is that? 3.5% it's simply a mathematical equation. 3.5% of $200,000 is $7,000. And I welcome these calls. I welcome these conversations. The whole reason that you and I do this and that we're so successful with this Friday show is because we are educating and informing our community. We are helping people understand that it's not hard to become a homeowner, but it does require a certain sense of commitment. We have to develop that action plan and then move forward on that plan to make it a reality.
Absolutely. And I love the fact that you educate, because, we don't know the answers to everything. That's why we have experts like you that are on here with Mortgage Solutions Financial every Friday from 1 to 1:30 to enlighten the community on all of the things that you need to know about home ownership. And what to look out for, the pros and the cons. And we just really go to school here every Friday with you, Rob. And we are appreciative of that we have you as a gym here in our community for those of us that are in the home shopping, those of us that are, still home, that have homes and maybe want to refinance.
Sure.
I always learn a lot when I come here with you, and I hope everyone else does too. We have about 4 minutes left. I want you to give me about 30 seconds on the benefits of that VA loan, and then I want you to close us out and tell us about Mortgage Solutions Financial and how they can reach you.
See, now you're putting me on the time limit. You got smart. You got the stop clock going. Sure. So let's talk about VA mortgage loans. There are several benefits to being a veteran. And clearly, as an individual, I couldn't be more grateful for anybody that is making that sacrifice on my behalf. As a veteran, you are entitled to a mortgage loan with zero down payment. That is zero down payment regardless of your credit score, whether it's an 800 credit score or a 400 credit score. No down payment ever, never, never. You will not have a down payment. Now, there are two components to a mortgage loan, your down payment and your closing costs. Every loan has those two components. We can couple the VA loan with a closing cost assistance program to bring a veteran to close, in most cases, to closing with zero money whatsoever. But the veteran has to start the process, has to give me a call. Now, in addition to that, the VA also allows us to go up to a 65% debt ratio with all veterans, again, regardless of credit score. That means that you can literally spend 30% more on that home than anybody else can spend on their home that is not a veteran. So being a veteran, you have a tremendous amount of benefit, but you have to start somewhere. The place to start the process is to give me a call, Rob Stern at 972-739-2350. That's Rob Stern at 972-739-2350. You can also find me on the internet at lenderstexas.com. And for just a moment, we'll talk about the Lenders Residential Mortgage Team. For the past 32 years, I've been a direct mortgage lender and a banker. As a direct mortgage lender and a banker, I work literally without a net. When I say without a net, I have no underwriting guidelines that are given to me. Rather, we create our own underwriting guidelines, which allows us to help those individuals that are perhaps a little less fortunate or who have been maligned in some form or fashion. I work with all types of credit, all types of individuals, not just purchase loans, but also refinance loans, cash out home equity. The main thing is to give me an opportunity. We are listed with the Better Business Bureau. I know I'm wrapping up. And again, my name is Rob Stern. My telephone number is 972-739-2350. That's 972-739-2350. I love each and every moment I get to spend with you on Friday's time. And thank you.
Absolutely. It's always a pleasure, Rob. Everybody, make sure you tune in next Friday, 1 o'clock until 1:30 right here on 1040 AM and 106.9 FM, KGGR. Take care, Rob.
Thank you. Bye-bye, and God bless you. Have a good one.
KGGR invites you to tune in at 1 p.m. on Fridays for our weekly interview with Rob Stern of Mortgage Solutions Financial. Rob has a wealth of information on the American dream of home ownership, credit repair,